You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live every Friday at 1:30 p.m. Central, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, I can listen to that tune all day. Just gets me rocking here on our Friday to wrap up our broadcast week. But we got a show to do, so I can't do that. I got to talk to you guys. My name is Mark Longo from theoptionsinsider.com. So, of course, from the Options Insider Radio Network, coming at you at the tail end of our Friday doubleheader. We kicked the week off, kicked the show off, really, kicked the day off, talking all things vol, and we get into all things TWIFO, all things futures, options. Got a feeling there's going to be a little bit of crossover, cross-pollination this week because everyone's got the Bitcoin on the brain, Bitcoin vol, Bitcoin what's going on, the futures, etc., and so on and so forth. Don't worry, we'll get to all that fun stuff here on the old program. Maybe a little crude, maybe a little gold, maybe a little other fun stuff. Whatever's catching your eye out there. Guess what? Probably caught our eye as well. If you want to play along, you can listen, of course, live every Friday, 1:30 p.m. Central, 2:30 p.m. Eastern, via Mixlr. And while you're listening, you should also head on over to cmegroup.com/TWIFO, TWIFO, for two reasons. One, it gives you a chance to sample what the heck we're talking about here with all this quick strike all the time. You can actually play for yourself and see what all the fuss is about. And also, B, you get to follow along with the show and see exactly what we're looking at in those reports. So if you're not doing so, cmegroup.com/TWIFO. If you're listening after the fact of the podcast, you can play along as well. Just make sure you change those expiration settings so that you get it to this past week, so you can to Friday to today, of course. So then you can see exactly what Nick and I were looking at during the show. And of course, however you listen live after the fact, hit us up. A lot of you guys have, spoiler alert, a lot of those questions are about Bitcoin. We'll get to some of those a little bit later in the show. First, let me welcome on my cohort, my partner in crime, the man who's long a ton of these cryptos, Mr. Nick Howard. Nick, welcome back to the show, and how goes your crypto fortune, sir?
Oh, please. Why would you even say that? I'm not long a ton of anything. I'm no Bitcoin, that's for sure. And you and I talked about it. I got a little dabbling just so you have to pay attention a little bit more, right? Because if you got no skin in the game, then you're not that interested.
I thought you told me you second mortgage on your house and you went all in on Litecoin. All
in Litecoin. Did I mention it was a dollhouse? It wasn't an actual house.
You did not make that clarification. No,
it was not a full on. No, just a little bit, just to see what's going on and to to keep the conversation going and pay attention, have something to look at, and it's one of those things where you don't do anything with it. You just sort of put a little in there and then you watch it and you just, hopefully it just keeps going up and you don't do anything about it, So anyway, yeah, nothing earth shattering at all, but fun to pay attention to, fun to watch. So we have to change our promo to throw some Bitcoin in there, right? That's going to be,
yeah, who knew? Who knew when we started this show that all things crypto would become de rigueur, sir, out there in the lands of the futures, options, and just about everywhere else. I don't think we have a single show on this network now that is immune from the questions about Bitcoin. They come in fast, hot, and heavy. I don't care what you're talking about. They want to talk about that. If it's the tech angle, tech and Bitcoin. If it's advisors and asset managers, are they buying Bitcoin? If it's vol, what's the vol of Bitcoin, et cetera, so on and so forth. It is everywhere, sir. And we shall get to that all. But first, there are some other assets that have been, I know it's hard to believe, Nick, but there are some other assets that have been moving. Some things that have been exhibiting vol, or perhaps in the case of our first victim here, wringing that vol, the lifeblood is left out of that volatility. Of course, I'm talking about crude settling out the week off about a handle and a half or so, right around the 57 and a half level out there. So all you crude bulls who are hoping for an extended rally north of 60 did not materialize this week. And of course, finishing the week down yet again means what little juice was left in that sponge, what little air was left in that volatility balloon, kind of got popped, kind of got wrung out this week. We were looking at one of our earlier shows this week, the OIV, which is the VIX of WTI, is hovering around 20, which is just kind of crazy town. So it just shows how little juice is left in that sponge, pretty much across the board, getting squeezed out. Not a lot left to squeeze, but they're squeezing what is there. So yet again, a lot of people have written in saying, when can I buy some premium in WTI? Hopefully you're doing it for the gamma, because you ain't getting a lot of the vol love out there. Even the gamma. I mean, this week has been all right, but gamma wise, it hasn't been the easiest trade either. Let's see. Talking about easy trades, let's see what people are actually trading out here. By the way, this week a little bit lighter than previous weeks. Not surprising. We had a big OPEC number last week that was driving a lot of the paper. This week, OI up, but only up about 3%, so a little more than 3%. So not a rock'em sock'em robots week like we've seen in some weeks past. Of that paper, 43% coming in the front month. So yet again, Mr. Nick, the weeklies remain a mystery that befuddles all that looks at them in WTI. But right in between, people will trade a contract that is coming due in a couple of weeks. That's the mystery. The front month contract right now, Nick, has 6 days to go. So you're talking effectively a weekly. And yet, here we go. It's got it's number one with a bullet, 43%. So they are trading a weekly. So I guess I misspoke. The weekly was the number one with a bullet this week, even though technically it's a good old monthly that actually was dominating the charts. Yep, Jan lighting it up. And if you're wondering, this week settling off around the 57 handle, maybe 57.5 was where the action was. Maybe it was people capitulating on 60, or maybe going down to the double strike. If you said the latter, winner, chicken dinner for you. 40,500 of the double puts in Jan going up. Number one with a bullet this week, listeners, including the lion's share coming on Wednesday. 15,000 lighting it up on Wednesday, so a big day out there on Wednesday. 8,000 on Monday. The rest kind of evenly spread throughout the rest of the week. Surprisingly, for all that paper, only a slight amount, about 1,200 closings. A lot of back and forth on this strike this week. A double strike was where the action was at this week in crude, listeners. Then we fall off a bit, pretty much fall off about half to the number 2 strike, which is close, 56 puts. So double puts, then 56 puts. Number 2, 20,000 of those, almost half, 9,000 and change coming again on Wednesday. So Wednesday, the put action day out here. 9,000 and change the rest of the week, kind of evenly spread out. Again, 89 contracts opening net on the week. So just churning and burning on both of these strikes. It was kind of a put palooza this week, quite frankly, because number 3 was the 54 puts. So double, 54, 55, 56 puts strip, pretty much lighting it up out here this week. 18, almost 19,000 out there. This time the lion's share coming on Monday, about 6,500 lighting up on Monday. A little more closing this week, about 2,000 and change on the 54 puts, but still just a lot of action. You got to drop down quite a bit pretty much to find the first call on our list, and it was the 58, the Jan 58s lighting it up to the tune of 14,000 and change. So number 4 on our list is our first call. Again, about half, actually about a third of that paper, a little less than 5,000 coming on Wednesday. The rest of the week kind of even, except for today, about almost 4,000 going today. So a little action out there on the 58s. Lighting it up out here. And number 2 right behind it, the 60 calls, 14,000 and change as well. The lion's share actually coming in today. So action on both the call strikes out here, 58 and 60, as we wrap up the week here on TWIFO. Both of these strikes, 60s kind of unched from an OI perspective. 58, so decent opening, about 2,000 contracts opening there. So paper, a little bit of reestablishing there on the 58 strike, which is not exactly surprising. It is pretty much close to at the money at this point. And you go a little bit farther out. Let's see what else we can find a little bit further into the weeds. Mr. Nick, March, a little active, 65 calls. So all you bulls out there who were lamenting, no love for the upside. All you had to do was look a little bit past the front month to March, and you got what you were looking for to the tune of 13,000 of those bad boys lighting it up. 4,000 on Wednesday, nearly 6,000 today. The rest kind of scattered throughout the week. About 2,600 of that closing, actually. So closing action on the 65 strike. Perhaps a little bit of capitulation there. Not going to break north of 60. Not going to maintain it. Okay. Then we close out there. Either way, a little action on the March 65s for all of you who are looking for some upside. We go a little bit farther yet again out to July, good old July of 2008. We saw the 70s lighting it up to the tune of about 5,000. All that today, Mr. Nick. So one massive block going up of 5,000 today. Obviously, we don't have OI numbers for that because this went up today. So yeah, I'm guessing probably open in paper on those 70s. So crazy bulls out there, you're not to be undone. And of course, if you're on the dark side, if you're on the south side of all things crude WTI, then look no further than June of 2019. What do we got going up there? We got the 35 puts, 1,300 times going up, 1,200 of that 1,300 going up on Tuesday, 100 today. Pretty much all of that opening. And also we saw about 1,001, I correct myself, of the 50 puts also going up out there in June of, again, 2019. These are longer term. So maybe a bit of those different days though. 1,200 for the 35 puts on Tuesday, 500 each of the 50 puts on Monday and Tuesday. So interesting paper kind of across the board. Not to be forgotten, we also had Dees 2020. If 35s were not low enough for you listeners, we saw 1,000 of the 30 puts going up out there as well. So crude dark side fans, you got some love out there this week. A lot of that, all that on Monday out here today as well. So a lot of crazy stuff out here. See, it's not all Bitcoin, Mr. Nick. There's other stuff lighting it up too, including an interesting week for crude. Kind of pick your direction, pick your poison, even though the top of the list still puts leading the charge. What's your thoughts out here, Mr. Nick? They continue to wring that vol out of crude. Saw a lot of put action this week. What else do we see out there from a skew perspective out there in good old WTI, sir?
Yeah, so let's take a look. Again, I'll reiterate what you said in the beginning, just about the weeklies versus the front contract. Front contract expires next Thursday. The weekly expires next Friday. So you figure, why not get a full week out of it and dabble in that first, week 3 weekly instead of getting the 6-day option. But I guess I'll never understand that. And part of me believes that it's still a function of trading systems, maybe not necessarily having to look at the weeklies as different products. So once systems are a little bit more generic in terms of how things get loaded, I think that will correct itself.
It's got to be something weird like that, because clearly the duration is not an issue for them. 6 days, they'll trade it. But it's got to be something weird, devil in the details, that's doing it, because otherwise it's kind of inexplicable why they're not touching that stuff.
Well, yeah, that's definitely what it more than likely is, because if you go and look at the product browser out on the CME Group website and you type in CL for the underlying, you're going to see there's going to be the WTI crude options, but then you're going to see 3 different types or 3 different products for the weekly options. So they're not associated or affiliated with the particular WTI crude oil options. So that's really the most important distinction. But if you use the new product browser out there, you're going to see, you type in CL, it's going to give you the ability to look at everything that's tied to CL. And you can get a list of all the expirations that are available. So maybe that makes people a little bit more aware. But that most certainly, even in the CME Direct, they recently, in the last build, they fixed it where they added an options grid where you typed in, the product, and then it just listed the expirations in days to expiration order, which just makes it a little bit easier to discover those different days to date ranges. So that's got to be the problem. It's the distinction between the different products, and the fact that each weekly is a separate product is kind of an oddball thing as well. So, or at least that's got to be a contributor. But as far as the skews going, I mean, I don't think it should be too much of a surprise that we saw the calls get a little bit cheaper this week, and the puts get a little bit of a bid, and that's within the first 6 months. After that, we don't see too much of a change in the shape of the vol curve. Kind of steady, all things considered. We keep talking about. I've tweeted out a 5-year vol, 30-day constant maturity vol chart, and we're on lows. We're not quite as low as we were back when crude was in the 90s. But we also haven't been trending sideways for as long as when crude was in the 90s. So, as low as vol is, I think from a percentage of vol percent standpoint, there's a chance we can go a little lower, because it was it was under 20 vol back then. I think it might have been. Let me pop it open again and make sure I'm not misstating that. It got as low as it got in the 13-14 range from a percent when the futures are up around 90. You're talking about whatever, 10 or 12 $12 range in the underlying, so annually. So I think that even as vol is low, we can still go a little bit lower, because our 30 days reaching, it's starting to trend down towards 20. And like I always say, if we continue in this range, we're going to continue to see sort of that slide pattern in the volatility. Now, as far as you're going to see some significant changes in the actual 25 delta risk reversal from a volatility standpoint, but from an overall richness or cheapness to the money, you're not seeing all that much of a change, like I mentioned. As far as, we've been talking about it, people complaining about vol, when it's going to happen. I mean, we're in this range, so I think people have to start thinking of their trading from a range perspective. And we talk about those things all the time in terms of trying to treat volatility. Buying options is not so much buying or selling when it's a lower high volatility. It's you're talking about now turning it into gamma, like you mentioned it. So I think people got to open their minds a little bit and try to figure out ways to take advantage of the fact that we're kind of in a tight trading range, but look for opportunity within that range. Whether you continue to believe vol is going to go lower and you put on some sort of strangle or some butterfly to sort of sit around in that range, and or a condor, right, to widen your break-even points on the left and right a little bit more. Or like we've been talking about, you get to the high end of the range and you don't see a follow-through, you can buy some cheap gamma up there and hedge it and hope it comes back into the bottom of the range or in the middle and kind of scalp around there, and vice versa on the downside. So, maybe we're lucky we have Bitcoin around so we can talk about something a little bit more wacky until we get this commodities to start moving around a little bit. And as far as crude goes, I just don't see much happening in the near term, especially when you look at how flat the term structure is from a future standpoint.
Yeah, let's look out then before we get to the craziness that is all things hashtag coin Let's get into another commodity, precious type thing. Some use it in coin shape as well. That is, of course, the gold. Kicking things off here this week. And if you're a gold bug, maybe you got some love for what's going on out here. We'll break it down. Of course, CMEgroup.com/TWIFO. You can do so yourself as we're doing it for you. If you were to do such a thing, if you go to that page, you might see something like this. Of course, you guys watching gold, big sell-off this week, off about 30-odd handles, right around the 12.5 level. So gold bug's not liking that. Of course, they're a very diehard group, as we've said many times here on the show. Vol, surprisingly, almost off a little bit, but not perhaps as much as you might expect. We all know the bias typically to gold out there is usually to the call side, so a rally usually equates to a nice little boost of juice for gold. The sell-off, not so much, unless the sell-off's pretty aggressive. And in this case, off a little bit, but nowhere near the vol apocalypse, perhaps. But that said, gold's kind of in a similar scenario to crude, where we're talking about on recent shows. It was hovering around the 5-year bottom there in the volatility cones for gold. So anything coming out at these levels is pretty serious. So again, premium buyers in gold land, not looking so good. But then again, the gamma could reward you in a big move like this. So perhaps you made up for it there. An active week out here in gold as well, as you might expect, given the big move in the underlying, over 8%, up on an OI perspective for the week. And number one with a bullet, looking here where the action was. If you said front month, you were right about, over half, a little over half, 53% of the volume going up out here in the front month this week. And if you said, we settled out right around 12.5, so I'm guessing 12.5 at the money puts are where the action was, because it was a big sell-off. Ding, ding, winner for you. 12.5 puts lighting it up, this week to the tune of about 10,000 of that, about a third, a little over 3,300 coming on Tuesday. The rest kind of evenly scattered throughout the week. About 1,200 opening on the week, so a little bit of mixed bag bias towards the opening there on that strike. Hot on its heels, 9,500 or so of the 1240 put. So people may be expecting or hoping or fearing that sell-off is going to exacerbate itself, piling in on the 1240s. About 9,500 of those lighting it up. Pretty evenly scattered throughout the week, with the exception of Monday. Only 65 contracts going up on Monday. So whatever reason, Monday not getting the put love out there. About 3,400 of that opening, so about a third of that opening. Again, people may, not surprisingly, a little opening action on some downside put strikes here in gold land. Then we kind of drop off a little bit to the first call on our list, which are the 1300s. 6,000 and change of those lighting it up this week. Monday and Tuesday, the lion's share of those, 2,000 each. Both of those days, the other 2,000 kind of spread out throughout the rest of the week. Kind of mixed, slightly biased towards the opening, about 500 and change. So a lot of back and forth on the 1300 strike. Maybe a little will they, won't they? A little capitulation, a little bit of all of the above coming in on that 1300 strike. And then we kind of break into kind of even money territory. The 12 quarter puts and the 1275 calls, both doing about close to even amounts. We'll start with the puts first, slightly more bias on the puts. About 4,800 of the puts. The lion's share coming actually yesterday on Thursday, 2,300. Then the rest kind of actually 1,400 on Tuesday, and then the rest of the day is kind of quiet. About 800 total opening on the week, so slight bias to opening. Followed on its heels by about 4,600 of the 1275 calls. The lion's share coming in yesterday, 3,200 of those. Of that, the rest kind of anemic throughout the rest of the week, and of that, about nearly 1,800. So close to half of that opening. So some opening action there on the 1275s. Then we get a little bit further afield, as we are wont to do. Some of the weirder trades we like to see. Remember that crazy upside gold, I guess you can call it vertical with a kicker here, if you want to call it that. Whatever the heck that trade was we profiled about a month ago, Nick. Still kind of burned in our brains. I don't know if we can find anything that crazy this week, but we'll try. Starting off out here, all the way out. Where the heck are we on the chain? There we go. We're all the way out here in June of 2018, where the 11 quarter puts were lighting it up, this week to the tune of, about 1,300, 700 on Tuesday, about 600 on Wednesday and Thursday. Again, most of that opening, pretty much all that opening. So someone coming out opening June 2018, 11 quarter puts, if you are on the dark side. If that wasn't dark side enough for you, we got the 9.5 puts in July of 2018, also lighting it up to the tune of about 1,000 coming up this week. Actually, no, about 550 of those. The open interest is 1,000. It's 550 of those, again, Tuesday and Wednesday, lighting it up, pretty much all opening there. And we go a little farther out, a little farther afield. We get to the 18 half calls. These are all the way out in June of 2019, where we saw nearly 3,000. So a pretty active week for these 18 half calls, June 2019. Yeah, a bit of the ways out there. So the bugs are playing. The bugs are back. All of this opening. So all 2680 of this opening, 2,000 on Tuesday, 680 on Wednesday. They come into play, and they come into play for some size to the upside there. And if that's not funky enough for you, Nick, I will leave you with this all the way out. Deast 2019. Yeah, we saw one lot of the 2,300 calls. So put that in your pipe and smoke it, sir.
Yeah, I mean, we're not going to see anything crazy like we saw when we were paying attention to that big trade out in the 3,000, 2,300, 3,000 strike, I think is what it was back when we were watching it. But you know, I've been watching the blocks as well throughout the week, or I try to as much as I can. And you know, there's people doing collars out there, and they're widening the strikes quite a bit. So, sort of an oddball one today that we see on the block was a bunch of August 1265 straddles were trading. So don't know the exact number, but it traded quite a bit on the block over the course of Friday. And and then some wider put spreads have been seen out there, 1150, 1250 put spreads the last couple of days. So there are people trading, and they're trading ranges and they're trading collars. So it's kind of you know, there's activity out in these options. So it not only on the electronic side, but on the block side as well. So I'd be curious. I got to take a look and see let me take a look at this August and see what kind of see, we only have yeah, we don't have much. Yeah, all the activity in August today is on the block. So it looks like as we go out on the curve, we're getting more block-oriented stuff, and then the electronic stuff is taking place more short-dated, which makes sense, right? Because there's there's probably less liquidity as you move out on the term structure. But you know, noticeable from a volatility standpoint and from a skew standpoint. So obviously, vol hurt pretty good this week, or you know, at least down for the most part. It's all red, but nothing too tremendous. But when you're looking at it from a relative standpoint to the absolute level of vol, it's in, you know. So still getting pushed down, but again, same thing, you know, where as much as we're down 23, we're sort of in the midst of the, you know, bottom third of the range that we've been seeing over whatever extended period of time that we've been watching this now. Of note, though, is last week we talked about starting to be near. We weren't quite as low as we were now when we talked about things being within the bottom portion of the range. But we mentioned about, you know, getting in and buying some cheap downside and hedging it in case you had a run up and you can scalp, or in case you continue to break and you'd get a little bit in the puts. And we see that in quick skew. If you're looking at the chart right now, you see the puts went from being you know, cheap to the at the money to being bid to the at the money, and you see that all the way through the June contract. So and we saw the calls get a little less firm than they were. So, and actually in the 48-day option or the Feb option, we see the call actually go from being 6.5%, you know, rich to 2% cheap. So we did see a shift there. So we moved away. Now, part of that was moving along the actual individual volatility curves. Part of that is, you know, moving where we got a little bit of a follow through on the downside. So puts got a little bit, as we're seeing in the Feb and the March. And like I said, all the way out through the June. And, you know, the trade that we've been talking about, the puts hedged and trying to scalp that within the range. You know, I put out some stuff of some history of these trades, and you got it. You're getting a couple opportunities to get your gammas, to scalp your gamma and get out of your deltas and get your premium back, and then, you know, and see the market kind of slide back down again and get a chance to get in. So we'll keep putting out those pictures so you can see where these trades are, you know, kind of how they're playing out as you put them on, and then, you know, and pay attention to the gamma. So that's kind of, I think that's probably the most interesting thing, and that's probably the biggest move we've seen in the quick skew in a while. And here we actually seen a shift to the downside. I think people would love to see this to slide a little bit more, but it looks like it's got some, I was looking at the chart. I think our downside lows are 1150. I don't necessarily know if we have that. If you remember, I don't know if it was the beginning of this week or end of last week when you can correct me, when we had the S&P get knocked pretty good, we saw gold run up pretty hard. So I think if the market shows any weakness, we're going to see, we saw both the gold and the treasuries will go up. So if we see any weakness in the market, you're going to see more people push back here. And now you get your chance to, kind of get to the top end of the range and maybe get out of some of the deltas if you have this trade on. So that's sort of interesting stuff we see here. And, pretty good increase in open interest. Like you mentioned, that's always encouraging. Almost 1 million open interest, from what we're covering here. So, and I don't know what that is from a record standpoint. So pretty good stuff.
Good stuff. You love your puts. You love your hedged collared puts.
I love my hedged collared puts,
That's
man.
your go-to trade du jour. And then probably like gold, it's kind of hard to argue. Calls are typically juicy. You can get away with doing some good stuff out there. So you get some nice protection. You pay for a good chunk, if not all of it, for weeks like this where the sell-off happens and your future ain't looking too good or your puts are looking too good. And then on the upside, you get all kinds of room to run. So interesting stuff out there. Speaking of interesting stuff and room to run, let's break it down. The big movers and shakers, rockers and rollers for the week. Sans coin. We'll get to coin in a minute. This is just the stuff that's currently listed over there on CME Group. But coming in a couple of weeks, we'll have some data on them, their futures as well. So that'll be interesting to sink our teeth into. Excuse me. But this week so far, and again, you can run this yourself, CMEGroup.com/TWIFO, or if you're logged into QuickStrike, wherever you're using this, you can do this there yourself. And the market scan, set the settings for a week and see the big winners and losers, pure underlying movement, no vol, no OI, nothing like that. So on the downside, let's just cut out the euro dollars because we know that's a funky bit of data there. Let's go down. Downside number one to the dark side, Nat Gas, about 9.3%. So not a good week for Nat Gas. We were talking Nat Gas recently on the show, what's going on out there. This week, taking it on the chin. Followed number two, 7.3% by Oats. I don't know if we've ever really broken down Oats on the show before, Nick. So maybe that's something we need to put into rotation. It's been a little while since we had a hardcore ags day here. It's been so dominated by other products of late. I got a feeling with all these new products launching pretty soon, I don't see ags getting into the rotation. But hey, hit us up if you're a hardcore Aggie. We'll see what we can do for you. Number three to the downside is Platinum, about 5.73%. And then KC Wheat and Wheat pretty much tied for 4 and 5, about 4.6% to the downside each. Upside was kind of a quiet week. Wasn't any big rockers and rollers. Soybean meal up nearly 2%, about 1.9%. Class 3 milk, our old friend, coming in number 2, 1.83%. Then the Nikkei yen up about 0.8%. And the rest kind of unched. Soybean eel, Dow E-mini, S&P E-mini all up fractionally on the week. So not a big week for winners and losers and movers and shakers on the broad commodity spectrum. But I got a feeling it's going to change when we get on into our volatility voicemail.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody. Welcome to, I think I said something else. Futures Options Feedback is what I meant to say. This is, of course, the portion of the show where we break down your feedback. And we got a lot of it this week, and a lot of it is aimed at a certain product category out there, shall we say. I don't blame you. You guys are all excited. You know, we've been talking about these products making their way to fruition. We're almost there. The first one kicks off this Sunday. We've got a week or so later. The CME products launching. We asked you guys about that in our question of the week. We said that there's so many Bitcoin derivatives on the horizon. We got the CME Group launching on the 18th, CBOE coming up on the 10th. We got Nasdaq coming to Q2 of 2018. We got plain old regular Bitcoin, quote unquote, you can trade in the usual venues. What are you guys feeling? Seem like some recency bias right now because people are really excited about just whatever they can trade right now. And the first one out of the gate is going to be the CBOE one, so they're excited about that. CME number 2, followed by the old school way. Our friend here, your buddy there, Mr. Mark Brant, he's asking us, who's going to list the options first on this? That's kind of a common question. He also says Chicago is starting to take control of Bitcoin. Maybe. I don't know. We have some expertise in this area, so okay from us. There's another similar question here. This comes from a lot of people have this question. Sat Market also has a similar question. He said, or perhaps C says, does Bitcoins have options trading puts and calls? I think we had something else that was similar. Well, I can't find it right now. A bunch of questions like that about puts and calls. So far, no. The answer is a big no to that. We got to launch the futures first. So the futures are coming in the next couple of weeks. We'll have our first forays into this space. Then we'll see some actual numbers, some actual volume, some actual trading detail, and then we'll know for sure. We can sink our teeth into it in quick strike, which will be nice, at least the underlying. And then eventually, I got to imagine if these things take off, and all signs point to the fact that there will at least be some interest in these, then if these take off, I got to imagine the options won't be far behind. It may take a little while for maybe some other approvals or volume or market makers to get lined up behind the scenes. I'm going to say conservatively Q2 2018, but I think we probably might see them faster than that. If these things, that's a big if these things actually take off and do some volume and everything. I'd like to see them. That'd be nice. Certainly that'd be easy for us to sink our teeth into, because if we can answer, Nick, we could finally answer the question that everyone's been asking. What would the skew look like? Because we would have it in front of us. How nice would that be, Nick?
Yeah, but it's fun to talk about it in the meantime anyway, just to make some guesses. But trying to address some of those questions. There's nothing. There are going to be exchanges who have options, but none of the ones that we talk about, or like you mentioned, the ones that are going to be offering the futures in the next week or so. But I know that you can do some. There are some. If you want to message me, there's some other opportunities you might be able to take advantage of from trading the Bitcoin price, just from on-off standpoint. So, but I think what is going to be fun to watch. The futures are coming out, right? And we know the difference between the futures. The CBOE is a 1 coin, and the CME is a 5 coin. And I've been saying all along, I think the CME is a 5 coin because they're kind of thinking of it, and again, I have no inside knowledge of this other than the fact it's just pure conjecture on my part. But you have that 5 coin contract, which I think is going to be treated sort of like the big S&P index contract, and eventually you're going to see a mini contract, which will be 1 coin. And if that happens, if there's a big coin, that'll allow the people like the miners and stuff like that to hedge the big risk, and then if that's successful in moving, then to give another opportunity to get a 1 coin contract in there, the mini. And I think, from my standpoint, that is going to make it hard for the other exchanges to compete, because you're going to have a big contract and a small contract and be able to have a nice mix and a good liquidity on the CME's marketplace to kind of hedge and do what you want and give plenty of opportunity to big players and to small players. The fun stuff is, we'll have a tool. QuickStrike has a tool. I don't know if it's going to be out this weekend, but it'll for sure be out next weekend, or maybe in the middle of the week next, where we're just plotting the Bitcoin real-time index. So it's there, and you'll be able to see it, and you'll also be able to see the reference rate plotted across time. And that's where we got to start. So once we get our history of the reference rate in there, we'll start to put some moving averages as well as some implied volatilities of those underlying. So you at least get an idea of where that kind of at-the-money volatility will be, but that'll be coming soon. And I think a while back we had it in the mid 40s to 50s, and we think we're looking at it now. I think we're a little bit higher than that, but I'll tweet out that chart, both the old chart and the new chart, as soon as John is done calculating those numbers and putting that sheet together. Some of the fun stuff I want to talk about with the Bitcoin, and I've been trying to pay attention as much as I can, is the CME's listing 4 four quarterlies. Let me double check that while we're on the phone here because I don't want to sound stupid. But the other cool thing is they also are going to have spreads on the futures. Now, if you think about that, right, it's that in and of itself is going to be probably an interesting trade. Because you kind of notice when if the market. So what do we got? We got 1, 2, 3, 4. We got 4 quarterlies, and then we have right now in the product browser I'm seeing there are 6 spreads being listed. So right now we have 2 serials and 2 quarterlies. So we have a Jan, Feb, March, June contract that it's going to trade, and then you're going to get a Jan, Feb, and a Jan, March futures spread contract, as well as a Feb, March, and a Feb, June futures contract spread as a March and well the March June contract spread. So Mark, think about that. When you see sort of, this thing is very sort of one-sided a lot of times. You see it nothing but a run-up. So what's the expectation there? That spread would be wide because people would want to buy the future contract and sell the front contract now. But when the market goes down, people are going to go, oh no, the sky's falling. What's going to happen? The spread's going to go the other way. People are going to want to sell the future than buy, So I think you got a chance to see something interesting, not only Bitcoin options when they come up, but calendar spread options as well, because you're going to see enough fluctuation just in that underlying spread that might be the one to trade. From my standpoint, when I start to look at it, I think that's going to be even more interesting than the outright. The outright will be there from a hedging standpoint, but the spread might be there for the actual options trade.
Yeah, I think there's gonna be a lot to sink your teeth. I think you're gonna be slinging these on day one, so you're gonna be. You talk about you're not wanting to play, but you're gonna add to your Litecoin portfolio with a little Bitcoin. I think coming up, a little futures on the reference rate coming up in about 10 days now, sir. So mark your calendar. I'm sure you already have. Speaking of craziness, this was a crazy week. We didn't include it in the movers and shakers, but obviously Bitcoin was rocking and rolling this week. It was actually cool because CME put out their specs a few weeks ago, so we could see exactly how this thing's going to trade. They put up their circuit breakers and everything else, so we can really sink our teeth into it. Always nice to have a little bit of that data at hand. And looking at last week's numbers, I think it was Reuters or Bloomberg, who calculated it and showed that this thing the 7% trigger would have been hit within. Let's see. When that would have been. I have it right here. Less than 2 hours after the day started yesterday on Thursday. A few hours later, about the 20% cap would have been hit, and that would have paused it for another hour. So it's going to be interesting to see once these listed things get out there and we start seeing some, actual circuit breakers like we've come to expect on real exchanges and real protections out there, how these start intermixing with the way these products have been trading for a while. You have possible for the futures to be locked and then the trading on other venues and vice versa. And what's that going to open up opportunities for people? And is this going to tamp down some of this crazy volatility we've seen of late? That's obviously one of the big questions going into this. All these listed products, it'll be nice when you could finally hit a bid for some size in Bitcoin, Nick. That's still a hard thing to do unless you're, some big OTC customer and you can construct something for you. If you're just a guy who's mining and you want to dump a few Bitcoin, a decent number, it's kind of hard to do that. So a lot of these venues out there that trade it now, they have restrictions, whether it's number of Bitcoins or notional value you could sell on any given day. So there's all these things that kind of prohibited you from really selling these things if you wanted to, let alone shorting them. So all this stuff coming into the mix, shorting, everything else, it's going to be fascinating to watch. Oh, and by the way, Nick, I'm getting a little jealous here. You're getting all this love here from our audience. Mark Brant also fired in, said, many thanks to Nick and at Quick Strike team for the heads up about miners Bitcoin recycling and selling calls, thereby dampening call skew. Keep the inside Bitcoin skinny coming. And then here in the chat room, we got Options Queen. Thanks for the chart, Nick. Loving Quick Strike. Again, all that's like I'm chopped liver here. Question, what was Bitcoin volatility this past week? It's funny. We talked about this recently, Nick. I think we just had this similar one a couple of weeks ago. Obviously, this week was a little bit different. While you're crunching the numbers, I'll vamp for you a little bit. But in general, it's kind of funny that everyone was expecting, given all the headline-making news we've seen out of Bitcoin, that the vol would be something crazy, 200 plus, or whatever the case. And when you actually ran the numbers in the show a few weeks ago, it was much more reasonable than you would think. I think it was somewhere in the 60 to 75% range, something like that. Obviously inflated, but nowhere near, the astronomical levels you might see before, crop report and some names, or like an FDA approval and a biotech, something crazy like that. So perhaps a little more reasonable. So, Mr. Nick, first off, I'm getting a little jealous. Where's my love? And then B, what do you have to say for the Bitcoin vol this week?
Yeah, we didn't run the report yet because it's not automated yet. We're still building off of snapshots, but I think it's in the 70s range right now. I'll have a better idea maybe at the end of the day or maybe Monday, and I'll put it out there. But again, we'll see. I mean, the number's big, so the changes are going to be big, right? So it's a little bit, if you got to look at it, I always think of it as 15. What if it's 15,000? What's a $150 stock look like? That's a $10, right? $10 swing or whatever. So I kind of look at it from that. But I think what I would go out there on a limb and say is, like, I think it was close to like 50% a month ago and about 70+% right now for the at the money. So if we go with what we had a month ago and talked about, I think the wings were like 40 or 50 vol over at the money. So you're looking at a pretty high volatility, which you would expect. But those numbers will be available soon enough for people to be able to go out there and look at them, and we'll have a rolling actual volatility underlying too. So, but right now, let's say 70 plus is going to be the best thing that I can put out there from the numbers that we have so far.
Don't worry, we got more coming here. Chili C says, love the TWIFO. Well, a man of taste, or perhaps a lady, which is good info. Back to collars. He's bringing it all back to our collars a few weeks ago. Do you guys think Bitcoin will be as favorable to collars as other commodities like precious metals? Well, that's the big question, right? That's what we've been kind of asking ourselves and kind of debating. We've had this debate on this show and other shows. I could see an argument for almost any type of skew out there. And I've heard interesting arguments for all of them. You can make a good argument that this is kind of a bull bonanza out there, and that the calls are going to be bid to high heaven as a result. And maybe the puts, maybe not so much. You can make an argument that both the wings are going to be really bid to high heaven because people want to get long, and they also are scared to death. They can't short it. They can't really sell it, so they're going to buy the puts to hedge too. So make an argument for a smile there. You can make an argument for more of an index type vol where the puts are going to be bid up because people want to hedge, but they're also going to be dumping calls like crazy because they can't get out of this thing any other way. So they take advantage of the liquidity and the options if these proverbial, theoretical options did exist, and then we'd see more of an index type vol. So I could see I think my initial assumption was going to be more index style. This was a few weeks ago before we saw the crazy run-ups now. I think I'm leaning more towards I think a bit of a smile now that because people are going to want to get the calls and they're going to want to get the puts. So I think I'm leaning more smiley. I don't know, Mr. Nick, you've had some time to chew on this one as well. What are your thoughts here? The ongoing debate of Bitcoin skew. What would it look like?
I'm with you. I think it's going to be hard to tell, but I can, as I think about it more, I start to have a little bit different thoughts, right? So the smile, right? Smile makes sense. People want to hedge their downside, hedge their up, or hedge their downside, and also sort of take advantage of the upside. But, I kind of look at it from another way to look at it from the put side is, I think that anybody that's long the stuff, right? There's probably got to be a fear of selling it, right? And maybe by selling puts, it sort of forces your hand into having to liquidate, right? Because now you're saying, I'm going to sell some puts, and if it actually does break, because presumably you've had it for a long time, it's appreciated. You're like, I don't want to get out. Or maybe you got out and you got your original. I like to think of it as you got your original investment out and then you let the rest run for free. But maybe you're saying, you know what, I don't want to sell it because I'm hesitant to sell it because maybe it's going to go up further. So maybe what you do is you finance, you take a little personal dividend and you sell puts. And maybe that forces the skew on the downside down because now maybe people, that will be a way for them to, have to. Actually, it's a forced liquidation process, right? So they're really forced to take their profits, but then they're getting that extra premium that's available. So, I agree with you. I think there's some real speculation, and you may see the thing swing back and forth in a crazy fashion intraday, just based on the fact of how the market has moved even this week, where we had the big swings up to 17 in the CME real-time index, and then back down to below 15 or near 14.5. So So I think there's going to be, we're going to see something. It probably start out as a smile until people figure it out, and then we might get some teeter-tottering back. And I'm just getting some numbers in from John. The 20-day historical vol right now that we have on our latest run is 91.75. The 60-day is 81 and an eighth, and the 252-day is 83 and a quarter. So higher than we said, higher than we thought, based on the last things that we saw. So 20-day historical, 92%. That's pretty crazy, right? So that's 20-day is 91 and three quarters, 60-day is 81 and an eighth, and 252 or a year, right? 252 trading days is 83 and a quarter. So that's what we got currently based on the way we do our vol calc. So 100%, that's a lot. A lot of stuff going on.
That is getting rich. Understandable. I'm cheating here, by the way, while we're talking. I put out a quick little flash poll. We only got like 10 minutes left in the show, so I don't know how much time we'll get to get some traction. It's only up for an hour, excuse me, anyway. See what you guys think the skew would look like. Hefty call premium, an index type skew, so low call premium, high put premium, smile, or something else. Let us know. It's the quick one. Maybe we'll do a more in-depth one a little bit later on, maybe next week sometime. Let's see what else we got. Let's keep cranking with these questions. A lot of coin heading our way this week, Mr. Nick. Jonas Grumble says, "Hey, last night my 19-year-old daughter texted me. She said, have you invested in Bitcoin yet? I think we are near a top. Can you say shoe shine, girl?" I don't know the last part. Maybe maybe he's invested, so she need to be a shoe shine girl because they'll be out of money. Maybe that's what he's implying. Either way, there you go. Maybe if your 19-year-old daughter is your contrarian indicator, then maybe we have hit the top here. Let's see. We were talking about this earlier. We amazingly enough, we do have some non-Bitcoin questions here. Mr. Nick, we got, what's this? Baspin asking us, is gold still the leading candidate for you guys when you're lining up collar trades? Well, Nick, you just talked about how much you love your collars out in gold. You're just talking about the skew out there as well. The skew gets richer when gold's, on the upside at least, when gold tends to be, maybe threatening a little more upside there. But we'll see. Perhaps I don't think it's as favorable now as it has been. But in general, if you're looking at a good candidate, I don't have the results in front of me, but remember we talked about that OCC collar study from, I think, about 8 or 10 years ago now. So the data is a little dated, but their number one was gold in terms of they did it over 10 or 15 years, I believe. So gold was a strong performer. So in general, you can do worse than choosing gold. I'll have to look at the data. Maybe Nick has it right now to see how that skew lines up compared to the best historical moment. It's not at it right now. I'm going to go out on a limb and say that. But still, yeah, Nick, you can do worse, right, than collaring some gold.
Yeah, I mean, I know that we talk about the collars a lot, but I still think it's really, for me, I look at it a little bit. You can do the collar, but you're going to flip-flop based on where you are in the range, right? So you can do, like, if you're on the downside range, you'd buy the put and sell the call, but I still would hedge the put. You can hedge both, obviously, but I just would treat it like I would either just do the one side of the collar, or you can do the other one and hedge the put and hedge the call as well. But I like it hedged. I like it hedged because you're taking advantage of the range. So that's, for me, that's why I think of it as a collar with a partial hedge on the option based on where you are in the range. So if you are on the downside, you're buying the put and selling the call and hedging the put. And if you're on the upside, you're buying the call and selling the put and hedging the call. So I kind of that's kind of how I like looking at it. Just because, but I'll even drop the whole collar and just do the hedge and treat it like a long strangle where you're hedging the legs individually. That's kind of how I like to think about it.
Yeah, Nick's never met a collar in gold that he did not like here. You got people early voting Mr. Nick on my flash poll here. 43% saying hefty call premium. 29% saying more of an index type skew, so low call premium, high put, and a tie for smile and other with 14%. Early voting. We got a few more minutes, listeners, for the live anyway. You can get in on this for another hour or so over there at Options if you're following us. We got people chiming in already with their own crazy ideas. What do we got here? We've got just saw it here. I just lost it really quick. Oh, this guy wants to know what's our market in the July 10,000 put. Do the math and you will be shocked. Yeah, I probably would be shocked given these days and how much it's moved just in the last few sessions. That's going to be a pretty hefty market, I would think, on that July 10,000 puts. Excuse me. Let's see. We got time for one or so more. Mr. Nick, this is kind of an interesting out of left field one. Jackson Till, he wrote in a while ago, a few weeks ago. This guy's been waiting patiently. Let's get him on the show. He or she asking, what is the biggest hashtag option with the retail crowd? Is it WTI, E-mini, gold, something else? Interesting question. You know, volume-wise, the number one of the bull is always Eurodollars. Not so much a retail product, though. So I'm going to go out on a limb, Mr. Nick, and say the E-mini and the S&P. That tends to have a decent overflow. We see a lot of people trading that by itself or trading that against SPY and vice versa. There's a lot of retail participation in that one. You know, gold and just volume-wise, gold and WTI can't really hang. I'm assuming by biggest you mean volume. And I got to imagine SPY or S&P Mini are putting up more retail percent. I don't have the exact numbers. Maybe I'll ask the CME if they know more about the exact participation of those on the retail side. But I got to look at. I got to go for S&P E-mini. Are you following my lead, Mr. Nick? You're going to do a point counterpoint?
No, I would just say the mini just because. You know, as liquid as the WTI is, the gold isn't as liquid as the WTI, and the E-mini is really liquid, and there's a ton of places and ton of expirations to trade there. And also, I'll go with that just for the fact where I will be in my town and I'll see people that are selling puts in the E-minis who aren't in the business. So if that means that, you know, that's a very retail conversation that I'm having. So I'll go based on you know, people thinking that works for them as a way of consistently making money. So I'm with you on the E-mini.
Yeah, let's see. We got some others. A lot of them here on the coin front. Let's see if we could squeeze in any others. This is just a comment here. We'll wrap it up on this one. This comes from, I like this handle, Frexitus Virus. Volatility got pretty crazy this last Thursday and Friday. Today was peaceful, though. He's talking about crude oil. The crude oil is probably getting steam for a rush to the upside. Okay, some typos there. So there we go. He's liking vol got crazy. I don't know what your crazy level is. Maybe for Thursday and Friday, localized to Thursday and Friday. Okay, I can see what you're talking about. But we've talked before. The vol in crude is not exactly super rich. More people sending in about this. People love this July 10,000 put now in Bitcoin. Nick, this guy sending in some data on this from this Deribit Bitcoin futures and options exchange. I'm not familiar with how to look at it. So apparently there are people already doing this and making some markets on these things. I'll have to go click on it and see what the heck they're pricing in. But I'm guessing, as the guy said, I'm guessing I probably will be shocked when I see the actual result. And let's do a quick wrap up here. If you're listening live, you can still vote for another hour, but on the show anyway, this poll we're going to wrap up here with, right now, 44% Mr. Nick saying a hefty call premium for the Bitcoin skew. Tie, 22% now. Smile getting some love. 22% for index and 22% for Smile as well. 12% saying other. Most of those people asking us about Bitcoin 10,000 puts in, I don't know why July, but July is the one they want to know. So lots of funky stuff happening out there. Mr. Nick. All right, everybody. That music means we're done. What a fun show. We went all over the place, went on crude, went on gold. You guys sucked us back into Bitcoin. I feel like Michael Corleone. I keep trying to get out. You keep pulling me back in. But you know what? We're cool with it. You guys like it. And clearly we're going to have some products soon that we can sink our teeth into. So that'll be really nice. And who knows, someday soon we will have this answer to this mythical, where will the skew be when we actually have the data. Speaking of the data, Mr. Nick, if I want to go get myself some of this data for myself, I want to play along with the show, I want to actually sink my teeth into Quick Strike, I want to go sign up and use the tools, where should I go? What should I do? Direct me, please, sir. I am directionless.
Yeah, well, you can get plenty of free stuff out available on the CME Group website, so cmegroup.com/quickstrike, and from there you'll see the list of all of the tools that are out there integrated right into the site. Then you also have the ability to register for QuickStrike Essentials, which is the free sort of light version of QuickStrike. And then, of course, you can go to Bantix, BANTIX.com, and you'll learn about the subscription version. And there you're going to get more of an opportunity to see prices getting updated, volatility curves getting updated every 15 minutes, lots more tools, the ability to save your work, create spreads, save spreads, all those kind of things, track P&L, build trades, and, look at the P&L and create watch lists, all those kind of good stuff. And then also intraday market data that's going to be very helpful, and a pretty comprehensive historical volatility tool called QuickVol. So if you got any questions, you can always tweet at us at QuickStrike1, QUIKSTRIKE1, or you shoot us an email at info@bantix, BANTIX.com. And I'm glad to talk about it anytime you would like.
There you go, everybody in the chat who's sending Nick all this. I'm guessing from a lot of your comments, a lot of you are already using QuickStrike. I don't know how you could trade these things if you don't. If you're not using it, head on over there. The best place to go, of course, you mentioned the CME page, but the best place for all things QuickStrike is Bantix, BANTIX.com. That'll get you access to the tools and everything else. You can always upgrade and actually use some of the cool paid stuff that we use here on the show as well. It's pretty cool stuff. Again, if you're trading these futures options, or if you're even interested in things like the Bitcoin coming down the road and then the options sometime after that, if you're not using Bitcoin, if you're not using QuickStrike, you're doing it wrong. Bantix.com, BANTIX.com. You can see what we use all week long here on the network. It's pretty good stuff. And on behalf of Mr. Nick and our friends over there at the CME Group, we're hoping to get some of their guys on soon so they can give us the skinny on all things that they're doing Bitcoin over. You guys keep asking us, so we keep asking them. Send us your guys. They're going to bring Tim McCourt back on, I think, to wrangle all the Bitcoin info out of him. So stay tuned for that, maybe next week. In the meantime, we'll see you here more for some more TWIFO this time next week.
This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at Bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.